We're going to bring in chief economist and global strategist at Europac, Peter Schiff, to analyze what's happening to our economy and whether people like Jerome Powell can actually attempt to fix this thing. Peter, it's good to have you on. In the simplest of terms, explain what it is that we learned today about how they're going to try and fix this inflation problem.
Well, we didn't learn anything. They're not going to fix the problem. They're going to make the problem worse. And first of all, they're lying about the extent of the problem, because 7.1%, which is supposedly going to be reported tomorrow as the increase in the consumer price index for 2021, that doesn't really measure consumer prices accurately. If we just used the same CPI that we used during the 70s and the 80s and applied the numbers today, we would get about 15% inflation for 2021. So this year, or last year, was worse than any year of the 1970s. And it was worse than 1980, when the CPI was up 13.5%. So this is the worst inflation we've ever seen. But unfortunately, it's going to get worse, because we have just seen the tip of an inflationary iceberg.
How did they do this to us? What did they do?
Quantitative easing. Yeah. How do you think? The Federal Reserve created the problem. They've been printing all this money, but they sent the printing presses into overdrive during the pandemic. But we had an even bigger problem. The government forced people to stop working during the pandemic. So people weren't on the job, they weren't producing goods, they weren't supplying services. They should have spent less money because they weren't earning money. The government made the mistake of sending everybody stimulus money so they can go out and spend money to buy products that didn't even exist because they weren't created. That's why we have a supply shortage, because everybody is spending money that the Fed printed, not money that they earned producing goods and providing services. So it's a double whammy. Prices are going ballistic, and this year is going to be worse than last.
What happens? I mean, so they're going to raise interest rates next year a few times, it sounds like, and they're going to drive them up to a level that won't even, it doesn't even seem substantial to me. 2%.
Well, you know, there's an old expression about spitting in the ocean, right? Well, I don't even think there's spit here. You know, there's definitely an ocean of inflation. Powell is talking about gradually raising the interest rate from 0 to 1% by the end of this year, and then maybe 2% by the end of next year. Inflation is already 7%, even if you accept the government's numbers, which are a lie. How do you fight 7% inflation with 2% interest rates? Remember, the Fed had interest rates at 2.5% in December of 2018, when they had no inflation to fight. The CPI was only up 1.9% in 2018, yet the Fed is not even going to raise interest rates now to a level they were back then. So the whole thing is a lie. The truth is, if the Fed actually raised interest rates high enough to fight inflation, it would crush the economy. We'd have a worse financial crisis than 2008. Stock market would crash, bond market, real estate market. Government would have to slash spending because interest rates would skyrocket. And so to prevent that from happening, the Fed is going to not fight inflation, and that's why it's going to get so much worse. But this is a problem that the government created.
And we just live in this kind of artificial, fake little world where everything seems fine, and they've created this kind of this fake world where the economy seems healthy, and they've built all this for political reasons, right? So that they can win elections.
Until you look beneath the surface, it seems healthy. We have record trade deficits, record budget deficits. We're bleeding red ink. We're living in a gigantic bubble. And now we're starting to see that because prices are really starting to rise, and there's no way to stop them from going up. And this is when everything comes collapsing down, because eventually this stagflationary environment that we're in, which will be much worse than the 1970s, more inflation and a weaker economy, is going to prick that bubble. So even if the Fed won't prick it, the markets are going to prick it for them.
$29 trillion in debt right now. What would you tell people? You know, we've got people all over the board here, people that are working still, that have kids in college. We've got people that are retired. What do you do right now to avoid the worst of what could be coming here?
Well, the worst of what's coming could be hyperinflation. I mean, you used that word earlier. We're not there yet, but that's exactly where we're headed. And if you're retired and you want to stay retired, or if you're planning on retiring, you better get out of dollars. You got to get out of U.S. dollar-denominated assets. Those are any kind of debt instruments in dollars. Inflation is going to wipe you out. It's a gigantic tax, and it's going to impoverish an entire generation unless they act quickly to get into real assets. foreign assets. I like buying foreign stocks, good dividend-paying stocks, commodities, energy, agriculture, minerals, precious metals, industrial metals. You have to own real things that can't be printed, because if you just own paper, you're going to get wiped out.
What's real estate right now in this country? I mean, if you own houses, if you own apartments.
I'd rather own that than debt. But, I think real estate in most parts of the country is going to have, a tough time, because we're going to be in a massive recession. And so if you have rental property, your tenants may not be able to pay the rent.
Yeah.
And the cost of utilities is going to skyrocket, maintenance, taxes, everything is going to get very expensive. So I'd rather own investment property outside the United States in countries that are in much better fiscal condition than the U.S. and aren't on the verge of a complete, sovereign debt and currency crisis. But it's the people who have loaned money to other people to buy real estate. They're going to get hurt the most, because their loans are going to get inflated away, because they're going to be repaid in worthless money.
I knew it was going to be an interesting conversation. I think a lot of people feel what you're talking about, but it's hard for most people to, I think, understand it the way that you do. But I mean, it's quite a situation this miserable government has put us into.
People should listen to my podcast. I've been talking about this. When the Fed was saying inflation was transitory, I was pointing out back then that they were lying, that it was just going to keep getting worse. So, the Fed, made a huge bet on transitory inflation, and now they're making an even bigger bet that it's going to go away by itself. It's not. And so people have to take action.
Peter, thank you so much for coming on, explaining it to us. You've effectively scared the hell out of me, but we appreciate you coming on.
My pleasure.
My pleasure, he says. Thank you, Peter.